Hi, Howard Deal here with the General Agency, and today we will be covering the Fundamental Care Group Health Insurance Limited Day Policy. Remember, if you like this video, to hit the subscribe button. Our presenter today will be Mike Cherry, National Sales Director of the Coterie Advisory Group. I know a number of you have expressed an interest in a high-quality, low-cost alternative to the traditional group major medical plans. And this policy has some great features. First, there's no deductible. Second, there's no medical questions or underwriting. Third, there's no dollar limit. And fourth, it's very affordable. So with that being said, let's get started. Take it away, Mike.
Hey, everybody. Good morning. I'm not going to take up too much of your time today. My name is Mike Cherry. I am the National Sales Director here at the Coterie Advisory Group. We're the National Program Manager for Fundamental Care. And I'm excited to share some details on our Fundamental Care Limited Day Plan. Going on our third year of marketing, seen a lot of success. We're really proud of this plan and super excited to kind of see where 2021 takes us. I figured we'd have just a quick webinar, share some details. I know this will be a good fit for at least some of your clients, and would just love to explore the opportunity of working on some cases together with you this year. But like I said, it's going to take me, 15 or 20 minutes to share all the information that I need to share with you. One thing I wanted to point out before we kind of got too far along here, let me just want to open up our our map of availability, just to kind of show you where we're available. I know we have people coming from all over the country, and so just to kind of show you our landscape. We're available in 34 states right now. And we've got very minimal participation requirements. In the states that you see highlighted in green there, we go down to 5 lives as a participation. It's actually 5 lives or 10% of the eligible population, whichever is greater there. But in some of the states, because this is a level funded plan, they require the group itself to be of a particular size. And so Florida, for example, requires groups to be 50 or more associates. California requires 100 or more. We still just need 10% of that eligible population in order for the plan to place. But all the other states that you see there, unless noted otherwise, we go down to 5 lives. So I just wanted to share that with you before we got too far along, just to make sure that this plan fits, in with your typical client base, and it doesn't disqualify you if you're not working with groups under some of those minimum requirements. But that being said, let me get these slides back opened up here. Wanted to share a little bit about our company, first and foremost, just so you know where we're coming from and a little bit about our history. But our founders have been in the group health space since the early 1990s. Started a company called Star Bridge, which kind of pioneered the limited benefit plans that a lot of us are familiar with now, and maybe some of us have been selling for some time. But we did that up until 2006, until that company sold to Cigna, after which we just kind of continued the trend in that limited benefit space with a company called Turnian, and did that successfully up until 2015 when they were acquired by Access Capital. And then that same group of successful tenured insurance executives with a passion to develop something for the hourly associates. So that, sector of associates that was getting left behind by the ACA, with the deductibles doing what they were doing and the premiums going up every year, we wanted to build something for those $10, $15, $20 an hour guys that, couldn't keep up with the changes in the ACA, and developed the Coterie Advisory Group, and that's kind of how the limited day plan came into fruition. So I'll get into the details about that and, why that's such a good fit for so many companies, but that kind of brings you up to speed with, where we're coming from. So look at some of the data on, why the limited day plan was developed in the first place. It was really originally designed to mitigate this growing crisis of the working uninsured. So right now there's over 21 million Americans that live in either a 1 or a 2 income household that are electing to not enroll in their employer-sponsored plan. Paying for the premiums is one thing, but coming up with $4,000, $5,000, $6,000 that it takes to meet the deductible is out of reach for a lot of individuals. You can see here the average deductible for an individual is hovering over $4,000. Those are actually old numbers. We're waiting on, Kaiser to give us some updated numbers, so that's probably gone up since the data that we collected. But needless to say, not a lot of people can come up with that at the drop of a hat. Renders a lot of these high deductible plans useless for so many individuals and so many families out there. And, at the same time, a huge number of employers cannot afford a significant employee-only contribution. There's a lot of small employers that no longer offer benefits, and a lot of mid-sized and large employers that might have these classes or carve-outs of associates that don't get offered any benefits. And a contribution to family coverage, as we know, is just becoming more and more rare. Take a look at the trends over the last 10 years. This is why it was so important for us to just eliminate the deductible completely, make that a non-issue right out of the gates. You can see here over the last 10 years, the cost of deductibles is drastically outpacing inflation, drastically outpacing workers' earnings. And so we wanted the benefits to be very usable for the typical working American. And so everything on this plan is copay driven. There's no deductible that the member has to worry about. If they walk through the doors of the emergency room, they're not going to have to come out of pocket with $7,000 in order to use their benefits. We relied a lot on focus groups to kind of tell us where this plan needed to be from a benefit perspective and from a cost standpoint. And more than a third of the respondents on those focus groups, so 38%, said that they would not consider a monthly premium of more than $100 a month to be a fair price. And nearly 3/4, so 74%, agreed that a monthly premium of over $200 would actually be considered unfair. And 40% of U.S. adults say that they don't have the money on hand to cover a $400 emergency, let alone that $4,000 deductible that we just saw there. And our employer focus groups tell us that an employer contribution of over $200 is creating a hardship, for so many employer groups out there. In particular, those virgin groups, those smaller businesses that really need to be budget conscious in order to stay afloat. And actually, the majority of the business that we brought on last year was virgin groups. So those groups that were looking to get some claims history, implement benefits for a first time, those types of groups are an ideal fit for this product. And all that data, that information told us that we needed to develop a plan that could meet the employee's basic needs, that the employee and the employer could afford. And here are some of the cost targets that we put in place to ensure that we were doing just that. So fundamental care, it's a 30 to 40% less expensive than your high deductible plans, and that's just from a premium standpoint. It's also a copay driven plan, as I mentioned. No deductible, that's one of my favorite talking points. You'll hear me say that at least a few more times. Not indemnity, so this is built almost backwards to your typical indemnity plan. And I'll show you the summary of benefits in another slide or two here so you can kind of see what I mean by that. But the important thing to take away is that we're not putting a limit on the amount of dollars that get paid out when the member uses their benefits. Requires just a minimum of a $50 employer contribution. Essentially, there's two levels of coverage that can be offered. The outpatient only requires that minimum $50 contribution. What will happen in most cases is the employer will offer the inpatient benefits to go along with the outpatient benefits, and that requires an additional $100 contribution. So all in, if the employer wants to offer everything, there's still just a $100 flat rate contribution that's required. We're not, demanding 50% of high premiums in order for the employer to place the plan. Very reasonable, contribution limitations on the employer side. And then a minimum of 5 enrolled, as I mentioned, or 10% of the eligible employees. So another way to say that is that any group of 50 or less requires just 5 lives. Once we kind of cross that 50 threshold, we just need to make sure we're hitting those 10% marks. So I talk a lot about, employees' basic needs. We actually referred to a Kaiser Family Foundation to tell us that the employees' 5 most desired benefits are going to be preventative care, which we covered 100%. This plan does qualify as a MEC plan, so minimum essential coverage plan. We try to get away from being over and above that, but at its foundation, it does, satisfy that MEC requirement. And because of that, all your preventative services are covered at no out-of-pocket cost. And this is a guaranteed issue plan as well, so there's no medical underwriting because of that MEC, requirement. Emergency care is covered. Mental health is something a lot of employer groups were asking for. Maternity care and birth control. So this plan is designed to include all of those benefits, plus it includes 3 days in the hospital on that inpatient upgrade as well. So cost, big factor, that's a big selling point. The obvious question there, is how are we able to keep the cost so low? And in order to reach the cost targets that were given to us by the employees and by the employers, fundamental care was developed as a limited day plan, which is why we call it the limited day plan. And so what that means is that for every covered event, so every doctor's office visit, MRI, emergency room visit, whatever it may be, the plan is going to cover a limited number of days per year, including that 3 days in the hospital. And here's a few bullet points on what is covered on the plan. But in interest of pulling back the curtain a little bit, let's just go through the summary of benefits here line by line. I'll show you everything that's covered. And again, preventative services included at no out-of-pocket cost. What we're looking at here is the outpatient portion of the benefits. This is where we get into some stipulations on the number of times that these benefits can be used over the course of the plan year. So for example, you've got your office visits with your primary care provider. Every covered member that's on the plan can visit their doctor 3 times per plan year. It's a $30 copay every time they go in. The plan is essentially going to function exactly like the members have been used to. They're just going to check in at the front desk there, present their ID card. The receptionist is going to collect the copay. And then the trend on down the line here you'll see is that after the copays have been satisfied, 100% of any expenses that are incurred are going to be covered by the plan. So that's what I mean by it's built backwards to your indemnity plans. It's a very unique design. Easiest way to wrap your head around it is to think of it as a major medical plan for a limited number of days. So it's fully comprehensive within those day limits that you see there. You got your visits with your specialists, 3 days in addition to the days that you have with your primary care provider. Urgent care built in there, emergency room visit. So let's say, for example, there's a single mom that's waiting outside of the emergency room and she's got a sick or an injured kiddo. She's not going to have to come out of pocket with a huge deductible the second she crosses that threshold. She's just responsible for that copay. And then whatever happens under that roof while they're in the ER is going to be covered by the plan. So lab, x-rays, blood work included as well. Diagnostic testing, that's going to be your MRIs and your CAT scans. Outpatient hospital services. So that's going to be essentially your outpatient surgery. It does say hospital, but we've got all these surgery centers that are popping up all over the place. This plan will cover the member in the event that they get a surgery in one of those surgery centers, just a $350 copay. Ground ambulance built in, that how that bill can rack up. And then, of course, prescription coverage, just a $15 copay for any generic prescriptions. There's no limit on cost and no limit on usage when it comes to the prescription coverage. And then there's brand discounts in place for any name brand prescriptions. Taking a look at the inpatient benefits, and as I mentioned, the majority of the groups that we work with offer the inpatient benefits. And the reason they're able to do that is because the members can decide on an individual basis which level of coverage makes the most sense for them. So some might want to do the outpatient only, some might want to do the combined coverage, and that's totally fine. You can kind of mix and match within the same employer group. The employer is just going to make the appropriate contribution depending on what every member is doing. So this plan can really be tailored to fit every associate's need and every associate's budget. So there's those 3 days in the hospital that I keep mentioning there. So $500 copay per day that the member's in the hospital. And then the inpatient benefits work just like the outpatient benefits. So after those copays have been met, 100% of any expenses that are incurred are going to be covered by the plan. Physician visits built in at no additional cost. Inpatient surgeries, just a $300 copay for 2 days of surgeries. And then anesthesia is kind of built in to coincide with that surgery benefit. So taking a look at a couple of, examples, here's a situation where the insured has to go to the emergency room. Let's say that emergency room visit is going to be $3,500, for example. So the member would pay that $500 copay that you see there, and then the plan is going to pay for the rest. So the plan pays for that remaining $3,000 balance. There's no cap. And honestly, it works the same if that emergency room visit were to be $5,000, $6,000, $7,000. It doesn't matter. The member is always just responsible for the copay. Here's another situation of a hospital stay and a surgery. So let's say the member spends a couple nights in the hospital and has a surgery while they're in there, and the bill comes out to $20,000. Obviously a bargain for a couple days in the hospital, right? But we like to use round numbers for the examples. So $20,000 bill, a member pays $1,000 for their hospital stay, so $500 per day for 2 days. So $1,000 copay for the hospital stay, and then a $300 copay for the surgery. So members responsible for $1,300 of the cost, and then the plan is just going to pay for that remaining $18,700 balance, or in this case, 93.5% of the total expenses. Some additional benefits that we included with no additional cost, no copay. We have unlimited telemedicine. We do this in large part to kind of plug some of those holes. So essentially the member can save those in-person visits for when they actually need to sit down with their doctor face-to-face. And they can use the telemedicine for everything else. So, nobody wants to go to the urgent care nowadays with everything that's going on and expose themselves to what could be out there. They can, phone the teledog, have prescriptions filled, do all that without leaving the comfort of their own home. This never expires. It never runs out. It's available 24 hours a day, 7 days a week. And then we also have unlimited telephonic behavioral health counseling. Again, that mental health aspect is something that a lot of employer groups were asking for. And this kind of works the same way as the telemed. It's available 24 hours a day, 7 days a week, never a copay, never runs out. What's unique about this benefit is that it includes 5 in-person visits. So how that works is that if the telecounselor deems that an in-person visit is necessary, they will help that member set up an appointment and get in to see the counselor face-to-face. And every covered member can do that 5 times per plan year with no out-of-pocket cost. So the benefit also has lab card. This is something that's just over and above that lab benefit that already exists on the plan. Basically, lab card allows the member access to free diagnostic testing as long as they use Quest Diagnostics. And then we utilize the First Health PPO network. I know a lot of you are familiar with First Health. Very large, very robust network. We honestly haven't run into any issues with finding a hospital or finding a provider that's close by, regardless of where that member might live. But I should say this plan does pay out of network as well. So if somebody should stumble into an office that's out of network, just defaults to reference-based pricing with a little bit of a cushion built in there as well. So it does pay in and out of network. Some situations when this plan has proven to be a good fit. And again, we've got over a year's worth of experience on this plan, so we're seeing the trends of when this is a good time to sort of plug this plan in for your clients. Groups facing large rate increases, high deductibles. We saw a ton of that over fourth quarter for those groups that were getting hit with rate increases they couldn't keep up with. We never want to talk anybody out of a fully comprehensive plan. If they can afford that and they're happy with it, that's where they should be. But in the instances that they just can't get there or can't keep up for one reason or another, a lot of times that's cost. We just want to be in your back pocket for when those situations arise. Virgin groups that can't afford to offer health insurance, again, 75% of the groups that we brought on last year were actually virgin groups. So huge market there, a lot of groups that realizing they can't get away with offering nothing like they have in the past. Everybody wants to offer insurance out of the gates. A lot of times they just can't afford to do so. And this is a great plan to introduce to a lot of your virgin groups. Groups that can't meet participation requirements, we see a lot of that. Groups that have classes of employees, that aren't offered coverage. We see this all the time in the restaurant industry, for example, where the managerial pool might be on an ACA plan, but the line level staff is looking for something. The cooks and the servers typically don't get offered any benefits at all. This is a great situation where you can plug this in, not break the bank for both the employees and the employers, and in turn allow those groups to be able to attract and retain some quality talent and get a leg up on the competition by doing so. Groups that are on indemnity plans, MEC plans, we did a lot of MEC takeovers last year. That actually accounted for around 25% of our total revenue. So groups that are looking to offer more from a benefit standpoint but just don't have a lot of money to work with is the reason we did a lot of MEC takeovers with this as well. Industries, I kind of mentioned restaurants, but retailers, staffing firms, construction companies is a big one for us. Also manufacturing, light manufacturing has been a home run. Agriculture, we're very ag friendly. Home health care is easily our most popular industry. We struck a nerve early on with the home health care guys. It's something an industry that you think would be taken care of from a benefit standpoint, and the fact is they're just not. So those hourly workers in the home health care industry love this plan, and the business owners are using it, again, a lot of times to kind of curb some of that turnover and keep their employees from splitting their time with another home health care industry. With janitorial, cleaning companies, they do need to be W-2 associates. This is a true employer-sponsored plan. So in the event that those janitorial companies are employing their workforce as W-2 associates, a great fit for that industry as well. And any hourly wage earners, anybody not making upwards of $50,000, $60,000 a year, they can't afford their premiums, can't afford the deductible on a more robust plan offering. This is a great fit for those hourly wage earners. Talk a little bit about quoting. This is something that we wanted to make super easy for you as the broker to be able to get some rates in your hands. We were able to eliminate some of the hurdles that typically come with getting a proposal. We don't need a census, for example, so just a few pieces of information on the company. We age band all of our rates, so it's easy for the employers and the employees to tell what they would pay, and we obviously include rates for member spouse, member family, etc. So you can see, depending on who you want to bring on in regards to dependents, what the cost would be. Industry code, zip code determine the rates. So if you just send us that information, name of the company, the effective date that they're looking at, we can turn around rates for you the same day. A lot of times, the limited day plan may not be an ideal fit for a particular company. We do have some other solutions that we can talk about in terms of our limited benefit indemnity plans. We get very strategic and very analytical with that plan for larger groups. A lot of times we have groups that need something voluntary, large population of part-timers that are looking for something. So we'd love to have those conversations with you. We're very different than a lot of the other companies that are doing indemnity plans, but we'd love to have some one-on-one conversations if you have something that comes across your desk that might fit that bill. Level funded, so again, I mentioned this is a level funded plan, and how it works specifically is it's a 12/21 agreement. So there's a 9-month run out at the end of the plan year, after which 100% of whatever is left over in that claims fund is just going to go right back to the employer. And because it's partially self-funded, that's really the only risk to the employer is whether or not they're going to receive a refund at the end of the run out. That stop loss is in place to ensure that employer costs do not exceed a designated threshold. The employer knows what their costs are going to be right out of the gates. It's basically just their contribution times however many employees they have on the plan. And then the stop loss takes care of any spike claims or anything like that. So employers love it because it's easy for them to figure out what their responsibilities are, and they have the potential for a refund at the end of that run out. We worked with Allied National out of Overland Park, Kansas to put this plan together. It took us a couple of years to build it. It always takes longer than you think. But Allied is the plan administrator and handles all of the customer service, the claims, they pay commissions. They've been an exceptional partner for us and obviously have been around for a long time in the level funded space. Some of you might be working with Allied National currently. on some of their other level funded plans, which is great. That's just all the better for us. And then the pool of reinsurers was headed up by Swiss Re. It's actually Swiss Re, Axis Capital, and FSL are the pool of reinsurers. So again, great companies, great reputation in the industry. So solid foundation behind this plan, backed by companies that certainly aren't going anywhere anytime soon.
Question from Florida. In Florida, the group has to have 50 or more employees, but only 10% need to enroll, meaning only 5 employees need to enroll.
That is correct. So group size, whether it's 50 or 100, we just need 10% of that eligible population. So, easy to figure that out, right? If you've got 75 people on the plan, we need 7 people to sign up, and then we're good to go. Yep. So that some of those states where the group itself needs to be of a particular size, it doesn't change our participation requirement.
Someone asked, is there a network of providers a person needs to use? Yeah,
so hopefully you caught that. That was the First Health Network. And again, it does pay out of network. First Health is massive. It's the Aetna-owned network. And so very easy, online search portal that First Health provides. And if you wanted to check out a zip code or a doctor just to make sure they're in office before you get this in front of any particular group, First Health makes that very easy to do. And I'll send that out to you. That's actually in our agent access portal, a link to that search portal that First Health provides. So by all means, check it out. I'm sure you'll find that they've got some awesome coverage no matter where you're located.
Someone said you mentioned reference-based pricing with a cushion. Can you please expand on that?
Yeah, absolutely. So how that works is it pays 125% of the Medicare allowable charges on any outpatient benefit, and it pays 150% of the inpatient benefits. So the risk with being out of network is the member could receive a balance bill if those charges exceed those parameters, that 125 or 150%, whereas obviously they would not receive a balance bill if they were in network. It's just going to pay the network negotiated rates, and the member would never run the risk of a balance bill if they're in network. So always good to be in network if you can, but it does pay out of network if that were to happen.
Another question, does Allied take care of the balance billing issues above 125% or 150%, or is that on the employee to take care of?
No, we help with that as well. We use a company called Zealous to help with those costs. So, and again, some of you are familiar with Zealous. So we have some partners there as well that help negotiate those rates, and that's not left up just to the employee to take care of that. We're there to help with that as well. So again, another great partnership we have with Zealous to help in situations like that. Good question. I appreciate you asking that.
Someone said that the link for the First Health Network was nice.
Yeah, absolutely. Appreciate you looking into that. And again, everything that we do is an open book, so that link to the First Health Network, by all means, easy to use. Just plug in your zip code, plug in the name of the doctor or hospital that you want to look at. They kind of give you a number of different ways to search, and that'll spit out a report of all the providers that are in the network. And again, you'll find that it's just super massive. We want to put together as many quotes as we possibly can. We get out of bed every day to help those companies that are in need of sort of an outside-of-the-box solution that aren't a good fit for your typical BUCA-type plans. So do not hesitate to send us any and all groups that you think might be a good fit. And we want to work with you on as many cases as we can this year, and help make this the best 2021 for not only you from a revenue perspective, but for your businesses as well. We want to help those types of businesses. But thanks so much for your time. And again, I'll be here, so don't keep the questions coming if needed. But we look forward to working with you on a more one-on-one basis here moving forward.
I hope you enjoyed our presentation today. If you have any questions, be sure and give us a call at the General Agency, 972-466-2915. And remember to hit the like and the subscribe button. Have a great day.